S&P 500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, Jake here with TrendSpider to go over another video in the technical analysis series. Today we have Jerremy Newsome, founder of Real Life Trading, to go over how he uses the risk reward tool in TrendSpider and just overall how he defines risk. Jerremy is one of the few people that I've seen present about his trading strategy where he doesn't even talk about how much money he's looking to make or what percent he's trying to make. He's always looking at things in terms of R. And so I think there's no better person to explain this and go over this than Jerremy. So Jerremy, thank you for joining and looking forward to having you show us how you do this.
Yeah, man, my pleasure. And thank you for that. I will say full disclosure, I am getting absolutely murdered this month. It's just been a hard month. I say murdered. I'm down a little bit. And we're talking about in terms of R's. It is very important to understand math-based trading. Trading is, in my opinion, a lot of second grade math. And the R strategy that Jake is kind of referring to, the way I approach it is, let's say you have a $100,000 account and that's what you're trading. I approach everything from a standpoint of a risk unit. So I know when I get into a trade, how much I'm going to lose. And for many people, I highly encourage you to start with something very small, nominal, up to about 1% of your portfolio. This is not how much you're going to invest. It's how much you're going to lose if you're wrong. So 1% of 100,000 is $1,000. Very easy to calculate that risk. So what we're going to do is I'm going to zoom into a smaller time frame to really give you a very crystal clear example of how you can use a lot of leverage and a lot of money and still have a $1,000 risk or a 1% or a 1R. So that way, you know your amount of risk on a trade. And for March, it has been, at least right now, just being transparent, it's a little bit of a challenge. I think I'm up 3.13 R's or percent for the month of March. And for me personally, I trade a $2,000 risk unit. So that's what I trade right now. So last month, I was up like 27 R's in the first 2 weeks. It was really ridiculous. January was extremely good as well. And this month, as I expected, was and is challenging. And the reason I say I expected it is because when you have amazing months in the market, it very often is followed by a little bit of choppiness. So what we're going to do is pull up AMD. And this is a stock that I day trade very frequently. I'm actually going to come in here to a 5-minute chart. So the 5-minute chart on AMD. What we're going to notice is the indicators on the screen right now are just two moving averages. Very simple, using the 50 and the 10 EMA. And the strategy is relatively simple. If it's above it, be bullish. And if it's below it, be bearish. Really hard stuff. So in this situation on AMD, you'll notice that obviously we've been below it for the last, day and a half and some change. So today, if you're trading AMD, probably we're primarily bearish. Well, let's say it comes up into this general vicinity right here, and you get a nice little reversal signal, nice evening star reversal, bounce and failure off of both moving averages. And you're going to go, okay, what is my risk per trade? Well, this is the risk reward tool right here. And if I zoom in just a smidge and take off my drawing for a second, notice if I'm going to go short, I want to short below the low of this bullish candle and below the low of this bullish candle. So I'm going to short right here. Move this on the downside. Give me 1 second. So this is my entry short below here, Stop loss is going to be above these areas there. So if I'm looking at getting in short, right, stop loss is up here and profit target is obviously much lower. So look at pretty much right about there. So again, what you can do is you'll notice using the risk reward tool and really any kind of calculation, you have your entry level, it says 78.89. So that's where I'm getting in. It says stop. So I'm actually getting in with a stop at that particular price. I'm shorting there. Stop loss is up here. Entry short, stop above my entry, and then my profit target because you're buying to cover at a lower particular price, right? Lower than where you're getting in at. So what I like to do is 78.89 by 79.25. Here's the formula. So again, I'll use a $1,000 risk unit just as an example. So 1,000 is your risk, right, Jake? At all times, that's about how much you're going to risk on any given trade. It's $1,000. So what we're going to do is the math involved is 79.25, which is the stop loss, minus 78.89, which is the actual entry. And that's going to give you a number. That number is called your stop value. Your stop value is what you're going to use to calculate how many shares you get in. So that's 36 cents. 36 cents. So check this out. With a $1,000 risk in doing 36 cents, your share size is actually 2,777 shares. Since AMD is at about 70, let's just say $78.89, that's actually almost $250,000 of cash that you're going to be throwing out on the table, will cash and margin. So if you have a $100,000 account, right, most brokers give you a 1 to 4 day trade margin capability. So this would be an outlay of $219,000 of cash. But how much is your risk? Bloop, 1R or $1,000. So entry there, stop loss there, your risk 36 cents. And on this particular trade, if you exited it when it makes a new low, right, bunch of bear candles in a row, able to capture on this particular trade, 50 cents. So risking 36 cents to make 50 cents, and your 50-cent gain would have equated to about 1.3 R's or 1.3%. So that's how I kind of approach everything, Jake.
I love it. I love it. And, that really helps things or keep things into perspective, because there's so many people that are just looking for a dollar amount. And let's say that you're trading a $10,000 position, and then you go and you want to make $2,000, you have to make 20%. And it's just, that calculation can really change dramatically with the position size that you're using. So being able to use something that's consistent, something that's very easy to follow. I just love the fact that you use the R's. I mean, when I first saw you talking about this, I had heard people really talk about risk and all of that, and, how to manage risk, but never really seen anybody talk about returns in R's. Everybody is talking about, my stop loss is 2% of my account or 1%, which technically is the same as an R, but just being able to measure that in R's just kind of creates this new system. And so I love whenever I go to your events, and I know I'm coming to one soon, everybody's talking about their R's. They're not talking about, oh, I'm up $2,000 today, I'm up 2 R's, and it keeps things humble. It's not like you have to tell anyone how much you're up. R's keeps everybody on the same page, and it doesn't matter if you're trading a $1 million account or a $10,000 account. 2
Bingo.
R's keeps things very humbling, I guess.
Yeah, absolutely, man. And not only that, but it does help you potentially remove a little bit of the psychological impact that money can have. So if you're like, okay, cool, I'm up 10 R's this month, it just makes it sound arbitrary or random, if you will, rather than if I'm up 20 grand, you go around telling people that, they could think something totally different. But if you say R's, now you have an opportunity to either explain it or talk about trading, or let them know that it's now more of a methodical approach rather than just a random, oh, I hope I'm in, and just get in haphazardly.
Yep. No, I absolutely love it. And I think, you're a great person to explain how this works. And thank you for going over the math on that. And as you said, it's not any crazy algebra with some crazy, formula with 17 different letters in it. It's a quick, subtraction and do a couple multiplications here and there, and you've got your risk defined, and just really makes things a lot easier to follow. And really appreciate you coming on and sharing that with us. And remember, for those that do want to use this R approach, you can use that risk reward tool in TrendSpider, and it really just outlines everything for you. So you can easily move your stop level, move your entry, move your profit target, all of that very easily within the system. So you don't have to go do that manually. So Jerremy, founder of reallifetrading.com. It is .com, right?
Yes, sir.
reallifetrading.com. A good friend of mine, a great trader. And we really thank you for coming on and sharing your knowledge with us about how you manage risk in the markets.
Yeah. Thanks, squad. I appreciate it.